So let's look back to what Chairman Powell said in his December when he did the press conference. He used the phrase, US economy is performing very, very well.
Yes, he did, yeah.
He made a comment about the final private demand, which was 3% growth last year. Again, a very good set of data. So on the basis of what we saw, and I know a lot of people have interpreted that as a hawkish cut. I don't think it was a hawkish cut. I think that he's just being coy about, what the new policies are going to be, where the new Trump 2.0 is going to start and what sort of policy they're going to announce. But on the basis of what's happening in US economy, job creation, you said some of the data just now, I mean, they just look good to me. I mean,
yeah.
and from where I'm sitting, yeah.
Well, no, only because you are a student of history, you are a student of market dynamics, you look at the empirical evidence and say, why do we need a rate cut? Well, no, that's me asking that as well. Do we actually need any more rate cuts in the United States? Should we hold off for the first quarter?
So I would put it the other way. Why should the rates be as high as it is now?
Right.
What is the job of central bank?
Stability. Getting
Exactly.
inflation.
So the inflation has come down from 5 to 2.5, and
Yeah.
this again going back to what we saw in the December communique from Chairman Powell.
Yeah.
Inflation has come down, and he did
Yeah,
say
but
that now the focus
stopped, hasn't it?
It has stopped. It has stalled, and I think that I'm not saying that it is likely going to go up, but what happens on Jan 20th, and what happens with deportation and everything that's going to happen, where it leads we don't know. So it's good to pause. So it's a good pause, I would say.
Yeah, okay. But again, you look at the PC deflator, it's stopped, and if anything, it's slightly moving in the opposite direction. Okay, what do we do with stock markets then on the basis of that? I mentioned a certain company that may or may not make EVs. Sometimes it's hard to notice whether they're making EVs when they're talking about other things such as, I don't know, robo-taxis, AI, batteries, you name it, apart from EVs. But we've got a growth company, and I'll quote one of the analysts from last year, a growth company that's got no growth. Certainly in its core product, Tesla. I mean, how do we own companies like these?
So again, I'm not going to comment on Tesla. I'm not long Tesla in my portfolio. So,
no.
But what I would say is that the way I look at investment is that I look at what does this world need and who is producing it. That's my way of looking at things.
Yeah.
Yeah, Chinese, or even if you look at why should we have tech company? I've seen a lot of charts that top 10 companies are 40% or 30% of index.
Yes.
Let's look back to free cash flow margin. If you look on the stats, the free cash flow margin generation of top 10 companies in 1950s was minus 5%. It was plus 5 or 10% in 1960s. Today it's plus 30%.
Wow.
So what we are talking about, there's an internal cash generation which is being used to grow sales. I mean, that's a powerful thing. So the world is changing. It's very difficult to forecast what's happening. But we just have to look at what's happening with cash flow. I mean, these companies are becoming bigger because their products and their services are in demand. And I'm not going to project next 5 years. It's difficult to project even next 12 months. But based on what's happening, percentages wise, based on what's happening and where things are going, we have to look at what they are doing. And if they're going to generate sales and they're going to generate internal revenue, and they have free cash flow of 30% when you go to buy the stocks.
Yeah.